The Jared Dillian Show.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. Pretty crazy day today, man. Pretty crazy day in the markets. So as you heard, Pfizer developed a coronavirus vaccine that is supposedly 90% effective. That is good news. And the market's kind of been waiting for this for a while. We all knew that a vaccine was coming, and I kind of heard that we would get one in the weeks after the election. So there is a vaccine, and all kinds of stuff happened today. Let me tell you what the markets did on that. So as of this morning, the Dow was up 1,700 points. Market was up 4 or 5%, and then it faded towards the end of the day. I think it finished up about 800 points. Bonds were way down. Interest rates were up. 30-year yields were the highest since March at 1.79%. So the bond market is a bit of a mess. We've been talking about that. All the stay-at-home stocks got killed. When I say stay-at-home stocks, I'm talking about Peloton. Peloton was down 15%. Zoom was down. And the stocks that were up were the ones that have been killed for the last 8 months, which are airlines, cruise lines, brick-and-mortar retail, and energy. Crude oil was up about $3.50, and energy stocks were up about 10 to 15%. That, I think, is going to continue in the future. So, very bullish on energy, retail, all this stuff. But the biggest story of today is that value was massively outperforming growth. And we've talked a bunch in the show about the persistent underperformance of value over time, and it's just been a complete disaster. And most of the hedge fund community are value investors, and hedge funds have been getting hurt, and anybody who likes to buy cheap stocks has had a really tough time over the last 5 years. And today, if you measure it in terms of small cap value versus the Qs, which is the NASDAQ 100 ETF, it was the biggest outperformance since the inception of the ETFs. I mean, a multi-standard, 10 standard deviations, just a 1 in a zillion shot. Really a crazy day, but it's something that has been kind of brewing for a long time. Everybody had just been watching energy go down and just said, does it just go down forever? Does value just go down forever? And this was the catalyst. The vaccine turned out to be the catalyst. Personally, it helped me out. I have a lot of these trades on, so it was a good day for me. Now, the other story is, it's something we've been talking about for the weeks leading up to the election, and I was talking about social mood. And I was talking about the fact that there was no fun allowed, and everybody was so miserable, and it was just the most miserable time in human history. And what I said was that after the election, there would be an explosion in human happiness. Number one, just to get the election out of the way, and I'm not really talking about the result of the election, though I think that net happiness is higher since Biden got elected. But now that we have the vaccine, there's been an explosion of happiness. We're happy that the election over. Half of us are happy that Biden will be president, and we're happy that there is a vaccine. This improved social mood is going to power gains in the stock market for a long time. And yes, I believe that stocks are going to go much higher, but it's going to be value that outperforms, not growth. Now, in other news, it sounds like Biden is going to nominate Janet Yellen as Treasury Secretary. And we've talked about who's going to be Treasury Secretary. And, Elizabeth Warren was a possibility, and she's kind of a lightning rod for criticism. And she'd be tough to get confirmed. I doubt she would get confirmed. Roger Ferguson was named as a possibility. He's the head of TIAA-CREF, and he used to be vice chairman of the Fed. Lael Brainerd was mentioned as a possibility. She's a governor of the Fed. I mean, Roger Ferguson is a great choice, and Lael Brainerd is a decent choice. Janet Yellen, I think, is a less good choice. I think mostly because of her personality. I don't see her as an executive, but whatever. So Janet Yellen might be Fed chair. I mean, not Fed chair, Treasury Secretary, which could be interesting. And she is a nice lady, and this is going to be much better than Elizabeth Warren, but perhaps not as good as Roger Ferguson. Now, the nice thing about Janet Yellen is that she's super, super smart. She's a brilliant lady, and she understands how the bond market works, which is better than other Treasury secretaries we've had in the past who are just political hacks. I mean, she understands how the bond market works. Now, having said that, she is very liberal and probably has some liberal ideas about how much spending and borrowing the bond market can tolerate. Remember, if Biden is going to develop new tax policy, Janet Yellen is going to be involved. And she's really going to be in favor of higher taxes. She is going to be a voice for higher taxes. If you remember, the architect of Donald Trump's tax reform of 2017 was not really Donald Trump. It was Steve Mnuchin, who was Treasury Secretary. So Janet Yellen is going to be very involved in any changes to taxes. So, like I said, Lael Brainerd is a Fed governor. Roger Ferguson used to be vice chair of the Fed, is now in charge of TIAA-CREF. In other news, in terms of like roller coaster days for stocks, I have never seen a day like Beyond Meat had today. Just absolutely crazy. So the stock was up a couple of bucks at the open. It tanked on the news that McDonald's was not using Beyond Meat for their plant-based burgers, but developed their own plant-based burgers called McPlant. McPlant. And Beyond Meat took a McFaceplant, and then it was trading on the lows for a little while, and then Beyond Meat came out and announced that they collaborated with McDonald's on McPlant, so the stock was back up to the highs. And then they had earnings after the close, and the stock crashed 30% on earnings. I mean, that's the most roller coaster day for a stock I have ever seen. I own Beyond Meat, just for full disclosure. I'm very bullish on the company, and this to me seems to be a buying opportunity. So, I mean, terrific. You got to be able to withstand the volatility in the stock like that. I mean, the stock traded in like a 35% range today, and this is why you have to risk adjust your positions. If you have a risky stock, if you have a volatile stock, then you must take a smaller position in it. Otherwise, it's going to dominate your returns. It's impossible to have a large position in some of these growth names. Anyway, a lot of people are happy out there. They're very happy. And happy people buy stocks. That may seem like a profound statement, but people who are happy buy stocks. This is why the stock market is very strongly correlated with social mood. Now, I mean, there are some potential hiccups over the next couple of weeks. You know, Trump is challenging the election. Mitch McConnell is now getting involved. I think it would have to, Trump would have to run the table from a legal standpoint to reverse the outcome of the election, but they're going to try. I'm going to say that if Trump is successful in doing this, then the market could actually go down. And, our theory, and we're going to talk about this later in the show, but our theory on, who's better for the stock market, Democrats or Republicans, I think in this case is reversed. I mean, I think it's clear that the market wants Biden to be president and not Trump. So if Trump pulls this off, it's going to be a bad day in the stock market. But happy people buy stocks. And one thing that people say about this stock market rally is that we're coming off of high valuations, and it's not like 1982. It's not like 1982 when we had very low PEs, single-digit PEs, and huge dividend yields. But back then, we didn't have negative real interest rates, we didn't have massive Keynesian spending, and we didn't have the Federal Reserve printing money to buy every asset under the sun. So yes, valuations are high, and valuations are going to go even higher. But as Stan Druckenmiller said today, this rally is a rational response to this news. It's not an irrational response. It's a rational response to this news, and it's probably not even fully priced in. If you think about what happened in 2016, Trump was elected and the market shot up like 4% or something like that, but it wasn't immediately priced in. The stocks went up for the next 6 to 12 months. The exact same thing is going to happen this time. Think about it. After the vaccine is distributed and things get back to quote-unquote normal, these retailer stocks are going to be 200% higher. These energy stocks are going to be 200% higher. Back in 2016, it wasn't all priced in at once. Stocks went up for a year, and this time is going to be no different. The vaccine is massively bullish for stocks, and it is probably worth 20% in the broad market indices. And I've talked before about the idea of the fourth turning. This kind of seems like the first turning, when people come together and are unified. And it may not seem like it right now, and you have these guys out there with sweaty palms waiting for the thermonuclear war. It's probably not going to happen. I think that the pandemic was the end of the fourth turning, and now it's over. Happy people buy stocks, and right now everyone is happy. Stocks may not be the best performing asset class over your investing career, but they're the top performing asset class right now. So if you feel the need to speculate in the stock market, just keep in mind that the old stocks that you used to speculate in are not the ones you speculate in today. You want to buy the beat up stuff, the box retail, energy, airline, stuff like that. That is going to be the stuff that gives you triple-digit returns. I'm Jared Dillian. This is The Jared Dillian Show.
The Jared Dillian Show.